I suppose that you guys have already watched this lecture for impairment. You might also have seen the video in which we did, question and answers. But we need to do some more questions. And as we do more questions, we will be doing some discussion also. So this is first question we picked up from your BPP kit. Pretty simple question, but that's like a starting point. Impairment of assets, IAS 36 we are talking about. The question, it says that a cash generating unit comprises the following assets. So number one, what is a cash generating unit? Before I move on, I'll just say cash generating unit is any that asset or a combination of asset for whom you can find out its own cash flows, which has identified own cash flows. For example, if you are a transport company, you run buses. I mean, you take people from one city to another city. That one bus could be a cash generating unit because you exactly know how many passengers you took on board and what money you received. Then how much did you pay for the fuel and maintenance of the vehicle and to the salaries for driver, etc. So you can exactly calculate the cash generated by this one vehicle. So this is one single asset and it is a cash generating unit. Sometimes a cash generating unit is not one asset, but it is a combination of asset. For example, you have a production equipment and that production equipment also has a generator. It does not work without power. Now, generator is not producing some goods. Generator is not making some output, but generator is providing power supply to the machinery. So they both need each other. They work together and then they give output. So in this case, these two things, the equipment and the generator, together they become cash generating unit. So cash generating unit could be a single asset. It could be a combination of assets. It could be a business. It could be a part of business, okay? It could be a one product line or whatever. So as small as single asset, and then combination of asset, and as bigger as the entire business or a segment of the business. A cash generating unit comprises the following assets: building 700, plant and equipment 200, goodwill 90, current assets 20. Total assets 1,010,000. One of the machines carried at $40,000 is damaged and will have to be scrapped. Scrap means that it will be sold for zero. Okay, it will be thrown. It will be just thrown away. There will be no resale value. You will not receive anything. So one of the machine carried at 40,000. Carried at 40,000 means the book value is 40,000, which means purchase price minus accumulated depreciation carrying value. Is damaged and will have to be scrapped, which means it becomes zero. The recoverable amount of the cash generating unit is estimated is 750,000. What will be the carrying amount of the building after the impairment loss has been recognized? Now, we know that in our books, it is 1,010,000. One of the machines you have to write off probably from here, which is 40,000. And the total value which you can recover is 750K. Now, you should remember that according to this IAS 36 impairment, we say that assets cannot be shown at a value greater than recoverable amount. Greater than recoverable amount. So recoverable amount, if you have watched the video, you understand recoverable amount was the highest of use, value in use and NRV higher of that. Recoverable amount is what you can maximum recover from the asset. Always remember, when you have an asset, you can only recover your investment in the asset from two methods. One, by selling it. Two, by using it. These are the only two options. If you purchase a car, you have invested $30,000 in car. How will you get back your 30,000? One, you can sell the car and take out your money, recover your money, or you can use it as rent a car and collect money very slowly and gradually over a period of time. So these are the only two options. If you sell the asset, now remember always, now there is another concept coming in. If you are recovering your amount or your investment by selling the asset, then it is called inventory. And if you are recovering your amount by using the asset, then it is non-current asset. This is another dimension of inventory and non-current asset. That if an asset's recoverable amount is intended to be recovered by selling the asset, then this asset is called inventory. Or if you will recover your amount by using the asset over a period of time, then it is non-current asset. In any case, the question says that recoverable amount is 750. Book value was 1.1 million. We have to decrease it down because it is clearly an impairment. In your balance sheet, it is 1,010,000. Whereas maximum you can recover 750,000. So it means that I need to bring down the values in the balance sheet. So there is an impairment, that's for sure. Now, when you do impairment or when you have impairment, the first thing two things you should remember. Number one, current assets you do not impair. So forget about, so you need to somehow decrease the value of these assets, okay? But this asset you will not touch. This 20 will remain 20. So never touch the current assets. And then goodwill always fully remove. Remove the entire goodwill. So first you need to see that how much impairment has taken place. What is the amount of impairment? And then how much of that impairment will be charged to building? How much will be charged to plant and equipment? This is, I mean, an impairment. First thing is, let's first find out what is the amount of your impairment. Yes, Moment. Any question you have until here, please ask me. See, please ask your question again.
You said that the current assets will not be impaired, but why are they included in the cash generating unit?
Okay, now first, let me amend my statement. In some certain circumstances, current assets can be impaired, like inventory can lose value. But we don't call it impairment. We only say that the realizable value is that. So impairment word we don't use. It is possible that you might have on your balance sheet an inventory of 100, but then you say that, I can only sell it for 80. So when inventory value goes down, don't call it impairment of inventory, because the word impairment is used for non-current assets. This is a loss of 20. You would say that this is like the realizable value of inventory is only 80. Okay, so then you would decrease it. In that case, if they particularly tell you in question, or it is possible that you might have receivable of 100, but you expect that your customers will only pay 90. So 10, there is a bad debt loss. There is a bad debt. So you don't call it an impairment. Okay. Yes, in some cases we do say impairment of bad debts, but that's a different case. That is not impairment IAS 36. That's a different thing. We'll discuss it sometime in SBR. But when you are saying that my receivables are 100, now I can only get 90, receivables are going down, but that's not IAS 36 impairment. It is just a bad debt thing. So anyways, what I was saying, that I'm just adjusting my statement, that I said that current assets do not get impairment. It is true, they do not get impairment, but in some cases their value may go down. In some cases their value may go down, and about that the question will give you exact information, that within current assets there is inventory of $10 and the realizable value is only $8. So then you will make it 18 if they tell you this. But if they don't tell you, like in this question, they did not tell us anything, any information. They did not give us any information about current assets. Because they did not tell us about current assets, we will assume that they will remain 20. This will go away. So first step here is always you find out what is your impairment. How much is your impairment loss? That's our starting point. So if I say that my carrying value, you see, I just want to do a 2-mark question and I am spending already, I don't know how much time. And I'm not very good in, making speech short. Recoverable amount is 750,000. So you get here 260,000 is the impairment. This 260,000 you have to charge. What is happening? I told you today my computer, there is some issue. You see, I make it bolded and it disappears. Anyways, there's something wrong with my computer. I need to restart. Okay, my impairment is 260. Now the question is that how this 260 impairment is going to be distributed. Like I told you, nothing here. This will remain 20. This 260 will be allocated to these 3 things. The first step is you remove the goodwill. So you remove goodwill and then you see how much do you get. After goodwill, you've got only 170. Okay. Oh, sorry. So 170. Now this 170 you have to split between building and plant. So how much you've got building? Building is 700, plant is 200. Because goodwill I remove totally. So 260 is total impairment. Make goodwill totally clean, make it 0. Goodwill will become 0. And whatever is remaining, that will be divided between. Can you not listen? So, but then they also tell us that there is an equipment, a machine, which has 40,000 value and it is scrapped. So it means that this 40,000 should be subtracted from here, okay, from plant. So I can say that my here 90 will be removed from goodwill. 40 this I will remove from my plant. And what is remaining, that is 130. So 130 I need to divide or I need to distribute. Okay, so how do I do 130? Yes, Kasim, how would you do that? 130 you have to distribute between the building and the plant and machinery.
So we have to take the total of the assets and we have like in proportionate basis estimated.
Okay, yeah. So you have building 700, plant after taking out this 40, plant is 160. So you make a total of that. It gives you your total assets are 860, and on this 860 you have to allocate 130. So I will use the formula 700 divided by 860 multiplied by 130. So I'm taking a proportion. Here I would say 160 divided by 860 multiplied by 130. So when I copy paste this formula here, I get, this is 105 impairment here. And here the impairment is 24. And let me just make it in better formatting. I'll just ignore these numbers. And then I would say, this is the carrying value of building 700 minus the impairment 106. Building is 594. And this one, my plant is, it was 160 because 40 I scrapped, remaining is 160. Out of 160, 24 is impairment, and it is 136. Just make a check on these 2 things. Is it 130? Yeah, this is 130. So you want to impair 130. This 130 has been allocated on pro rata, on proportionate basis between building and plant. The question asks you that what is the carrying amount of, what will be the carrying amount of the building after the impairment? So the carrying amount of the building is 594. Your answer should be 594,000, which is answer option C. Okay, I spent quite a lot of time, maybe 10 minutes on this question because we did some explanation. Now let's move to another one. Question 40, interesting question. Again, a lesson to learn from here. It says that Lition Limited owns a machine that has a carrying amount of 85,000, which means balance sheet value, book value. At the year end of 31st March 2009, its market value is 78. So that's interesting. Your carrying value, or you can call it book value or carrying value, whatever you may call it. I usually call it book value or carrying value. That is 85,000. Whereas it has a market value, which is 78,000. If I don't have any other information, only until here, I cannot continue to show it for 85 because it is more than the market. So if I see this thing, some doubt comes to my mind. But then it says, and cost of disposal are estimated at 2,500, which means that in order to get 78,000, you will have to spend 2,500, maybe some kind of service fee, maybe transportation, maybe commission, sales commission. So you have to pay 25 as cost of disposal. So you don't get actually 78, you get 75,500. If you sell the equipment, by selling the equipment, you get 75,500. Then it says a new machine would cost 150,000. Lition Limited expects it to produce net cash flows of 30,000 per annum for the next 3 years. The cost of capital of Lition Limited is 8%. And what is the impairment loss on the machine to be recognized in the financial statements on 31st March 2009? Now, one thing they just they try to cheat you, or not really a good thing, because I see this question is they used some not good language, because they said that a new machine would cost 150,000. This is irrelevant information. Impairment I calculate for my existing assets. Something which I have to purchase in future, I don't calculate its impairment. So I'm not really interested in this thing. And then it says Lition Limited expects it to produce. So for a moment, it looks like that if you purchase this 150,000 equipment, because this it, you refer to this part, okay? It says Lition expects it. And usually when we use pronouns, pronoun is for the previous noun. So this it is for this new machine, produce of 30,000 for 3 years. Oh, doesn't make sense. If I purchase a machine for 150 and then it gives me 30 times 3, which is 90, why would I purchase it on day one? So actually, what they mean here, what they have done it, like I said, that it's not a good way of drafting a question. This thing is irrelevant. You just ignore it. And this 30,000 which you are getting, you are talking about this old equipment. This 30,000 for 3 times is not for the new machine. This is for the machines which you already have. And this is going to give me my value in use. If you remember, we have value in use in impairment lecture. We said that value in use. And value in use is the present value of all the future cash flows. So you've got 30,000, 30,000, and 30,000. And you need to find out the present value. How do you do present value? So present value will be 30,000 divided by 1.1, or 30,000 divided, I'm sorry, not 1.1, discount rate is 8%, 1.08, 30,000 divided by 1.08, and I'm using this power. Actually, I can't see here. I told you there's something wrong with my Excel. If I put 30,000 divided by 1.08, I want to put power 2. Excel is not allowing me, so I will divide it 2 times. So please allow me to do this manual way of doing it, but you should be putting it power 2. And the power function is on Excel is something like this. So I should be doing 1.08 and power 2. Okay, this is like power function. Anyways, if I go for the third year would be 30,000 divided by 1.08 power 3. I can't use power, so I'm using it 3 times. It makes me all the same answer. So if I put it here and I see, so and you make a total. So what do you get here? 77,319 or something. You see, Excel is just bothering me. It just disappeared. Yeah, 77,312. This is my value in use. And then I have my realizable value. Realizable value, I calculated above 78,000 minus 2,500, which is 75,500. So now what we have got 2 numbers, 75,500 and 77,312. And what you do that you recoverable amount, when we speak, we have to take these 2 numbers and you have to take bigger of them, highest or higher of them. So higher is 77. So 77,312. So it says that whether if you sell the asset, you get 75. If you use the asset, you get 77. Whatever you may do, you cannot get anything more than 77. So 77,312 is your recoverable. This is what you can recover from this asset. In the market, and in the book value, it is 85,000. You already have recorded in your books as 85. So the difference is the impairment. So 85,000 minus 77, I would write down here. 85,000 minus 77,312, that would be your impairment. This is what they have asked you, that how much impairment you would recognize. It is, sorry, I can't do bold or anything. 7,688, this should be the answer. You would write down 7688, this is your impairment. Are we clear on that? Sorry, I just think that you should be doing because it says 77,312.97. So when you do actually rounding, you always do in the last step. So I would write down 85 total. 77,312.97 I will do. I will write down here 0.97. You don't do rounding up, rounding down. You need to sometime round off the numbers. Don't do round off in the middle. Always do round off in the last step. So this is not my last step. So I will not round off or round up or round down here. I will write down full number 77,312.97, and then this answer comes. And now I will, in the last stage, I will say, let's do the rounding. Now in this question, they do not tell you. Sometimes in exams, you have noticed before in your previous papers, they say you write down to the nearest dollar, write down to 1 decimal place, write down to 2 decimal places. You should be writing it down at 7687. That's it. Ignore the 03. They didn't mention, but you can write down. It is just 0.03. So rounding up or down in the last step. Are we clear?